Hello friends, welcome to your channel FINOMENT. Today we will be doing all about the financials. Now before moving ahead, we will understand what are the financial. It is nothing but the written records of the company which shows the business operation of the company and from which you can judge the financial performance of the company. Financial statement shows the financial health and earning potential of the company so that you can judge whether the financial health of the company is good or bad, and accordingly you can invest. And normally these financials are used by the investors, market analysts and creditors like that, so that they can make a decision whether to choose this company for the investment or not. So now what are the financial statements in India are there? First, it is balance sheet. Second, it is profit and loss statement, which is normally called as income statement also. Third is cash flow statement. In this video we will cover the first part, that is balance sheet, and in coming videos we will be covering the next parts also. So now we will do the interpretation of balance sheet. The word itself says balance sheet means it should be balance, that is total asset should be equals to the liabilities. Now liabilities will have two parts, that is normal external liabilities plus internal liability. It is called as shareholders equity. Now first we will understand that company borrow the money. It is called as source from which they borrow the money. They borrow the money from the source, that is internally they borrow the money and externally they borrow the money. The fund which is internally borrowed, it is called as shareholders liability, that is they borrow from the shareholders, it is called as shareholder. And the company which earn the profit, it is also called as a fund. They can use this fund for the business operation and expansion. And second, company borrow the money from the lenders, that is financial institutions, banks, etc. And these two funds they use to run the business. That's why they use the fund to purchase the asset like factory, plants, land, car, then computers, office equipment, furniture, fixture. These are basic required for the company to run its business. Now we will learn how the balance sheet looks like. First, this is the on your screen balance sheet format. On the top it is written as the name of the company. Obviously the name should be appear on the top so that everyone can come to know that is this company's balance sheet. So name is should be on the top, then balance sheet what is written on the middle, and thirdly written as the period, for which period the balance sheet is prepared. Generally balance sheet is prepared from the 1st of April to the 31st of March. Now first column it is particulars, all the content will be written here. Then next column is note number, that is schedule number, that is this content it should be given in detail, so annexure will be attached, so annexure number is written here. Then third column is current year's figures are written here, and in the last column previous year's figures are written there. Okay, now first head is equity and liability. Equity means internal source of fund and liability means external source of fund. In that first part is shareholders fund, that is internal funding. Company borrow from money from the internally, that is shareholders fund. So shareholders fund is divided into two part. First part is share capital. Share capital have two parts, that is company borrow from the equity shareholders and preference shareholder. That's what is called as equity capital and preference capital. Then second part is retained earning. Retained earning, how the retained earning is derived? The company on the net profit, that is when prepare the P&L account, sale minus all the expenses is net profit. So net profit is divided by the company into two parts. The first part, company distribute its net profit to the shareholder, it's called as dividend. And second, company which company retain in its business to run the operation, it is called as retained earning, and it is also called as reserves and surplus. I hope up to this you all are clear. So share capital we have discussed a part. B part we have decided reserves and surplus. C part is money received by the company against the shareholder share warrant. This has to be declared in the third part. Now second, ABC is completed. Now second point is share application money. When company has not issued the shares to its shareholders and company has just received the first part of the application money, this has to be shown here. Here in this portion the company has not still issued the shares to the shareholder. Only first part payment is received from the shareholders. Now third point is non-current liability. It is also called as long-term liability. Company have borrowed the money for a longer period, that is more than 1 year. So in that, A part is long-term borrowing. Yes, this is the part where company borrow the money from the financial institutions, then other banks, etc., for a longer period of time, that is more than 1 year, that is for 5 year, 10 year, etc., is to be disclosed here. Then deferred tax liability, here it comes the taxation part, income tax part, so that has to be shown, income tax, deferred tax, net part here in B portion. Then other long term liability. Now what is the meaning of the other long term liability, which are not shown above, which has to be shown here? That is rest of the debts, that is amount that company has borrowed and which required to be paid in more than 1 year. That other than company borrow from banking and financial instrument, that has to be shown here. Like lease liability, company has taken an office on rental basis, lease basis, then taken a loan for that to repay, then lease liability shown here. Then customer, from which customer company has taken the deposit from the customer, that has to be shown here in other long term liability. Then long term provisions. What is the meaning of the long term provision? The amount that company kept aside to meet its future liability in case if the liability arise after a period of 1 year. So for a contingent, you can say contingent liability, company make a provision here so that if liability occurs in the future, they have to pay it in future. For example, money set aside by the company for its employee benefits such as gratuity. If employee company knows that this particular employee is retiring in next 2 years, because 5 years has to be is completed for that employee, those they kept aside for payment of gratuity, like leave encashment, provident fund amount. Now we will move to the next part, that is current liabilities. Current liability means short-term liabilities which the company normally pay back within a period of 1 year. So in A part, it is short-term borrowing. It is also company borrow from the financial institution for a period of shorter term, repay its day-to-day expenses. Then next portion is trade payable. Trade payable means creditors. Here any amount pending to be paid to its supplier has to be shown here. Company purchases the goods, make an expenses, so any amount still company has to pay to its supplier, that payable part has to be shown here. Then other current liability. What includes in other current liability? Short-term liability like employee related dues, like income tax dues, any pending income tax dues should to be shown here. Then any advances company has taken from customer, bill has not been raised on customer, but company has taken in advance money from customer, so that has to be shown here. And the last part is short-term provision. Company kept aside a certain amount to pay its day-to-day expenses, so company keep this amount as short-term provision, like provision for employee benefit like gratuity, leave encashment, they have to be paid in shorter period, in less than 1 year, they keep the amount here. Then provision for tax, any taxation has to be paid in the near future, near 1 year, then they keep this amount here. Then any salary payable for the March or February month end or year end, they keep the amount here. Then any day-to-day expenses like electricity payable, telephone expense payable, they keep this in short-term provisions. So in the first part we have completed the liability section, that is equity and liability. Now in the second portion we will cover the asset side. So in asset side, first is non-current asset. Non-current asset means long-term asset or fixed asset. In that first part is fixed asset. Fixed asset have 4 portion, that is tangible asset. Tangible asset means asset which you can touch and purchase. So tangible asset like land, building, plant, office equipment, office furniture, etc., that has to be included here. Intangible asset means which cannot be seen or touched is called as intangible. Like company has generated a goodwill, make a brand, then copyrights, trademark, that has to be included here. Then capital WIP means company has taken any project and which is not completed, which is in under process, so that has to be included in capital work in progress. Then company has not completely developed its intangible asset, that completely not made his brand but it is in process, then intangible asset under development has to be shown here. Then non-current investment means long-term investment, that is company has various subsidiaries, joint venture, associates, that company has made investment in its subsidiaries, investment in joint venture, investment in associates, has to be shown in the long term investment. Then deferred tax asset, if there is no deferred tax liability, then if there is a deferred tax asset net, then has to be shown here. Then long term loans and advances, for example, now company has given loan to anybody, then for a period of more than say 1 year, then that has to be shown here. Then other non-current asset, include capital advances, that is company has given advance to the any supplier, then has to be shown here. Then any prepaid expenses, company has made advance payment of any expenses, then has to be shown here. Then advance tax, company might have paid advance tax quarterly, that has to be shown under the other non-current asset. Then this first part is completely long-term asset. Now second is short-term asset, that's why it is called as current asset. In that, for current asset means company has invested in equity, mutual funds, equity shares, that's equity debt funds, etc. has to be shown. Inventory means company has bought the goods, out of that company has sold out, but some there is a still pending in its stock, then closing stock has to be shown here. Then trade receivable means company has to receive a money from its customer, then if complete amount is not collected from its customer, that has to be showed as a trade receivable. In C point, cash and cash equivalent include company having any surplus cash after utilizing all expenses, etc. still company has cash, so cash balance has to be shown here. Company might have a many various banks, so closing balance of the bank has to be shown in cash and cash equivalent. Then short term loans and advances, has given a loan for a period of shorter term to any person for a period of 1 year, then has to be shown here. Other current means company has given security deposit for its rental office, and security deposit has to be shown here. Company has given loan to its related party like subsidiary, directors, etc. has to be shown here. Company has given any advances like to related members, wives, sons, etc. Then advance is given to them, is to be shown here. Then interest which company earn from these loans and advances, which has not actually received but it has accrued, that has to be shown as a interest accrued in other current asset. Means miscellaneous asset which has not shown above has to be shown here, like company has made a term fixed deposit, that fixed deposit has to be shown here. Company has given us advances to the supplier, then this advances to be shown here. Hope this video is useful to you. We have covered the balance sheet portion in first video. In coming videos we will be covering the other financial statements. If you feel that video is useful to you, then please do like our video and please subscribe to our channel FINOMENT if you have still not subscribed it, and press the bell button so that you will get the notifications for the next videos. And also please comment it in the comment box on which topic you want to watch the next videos.